I just made $3,130 trading SPY. I'm going to show you how exactly I did it and how you can as well. So this here is a swing trade. And what I essentially did was, as you've heard before, bought the dip, as crazy as that sounds. And the reason I did that is because if we auto zoom out and look at the past 6 months, it's been going in an uptrend. So if we go further back than that and go for the past, let's just say 2 years, it's been going in an uptrend. So what do you possibly think if we have, just as a logic piece here, if we have a big dip from here to here is going to happen? It's a dip and it's going to rise back up. Now here's the continued kind of detail information, I suppose, that I can walk through as far as my trade, et cetera, et cetera. So we had a low here, a high, a low, a high, a low, a high right here, a low, and it continued up to the final new highest of all time, high of 609.07. And we finally, and so big picture, sure, it was higher. And we then started getting lower lows right here, because this right here, excuse me, was lower than this. Then we had this low, which was lower than that high. Then we had another low lower than the one previously. Then we had a lower high, and we had a lower low. Everybody in the world saying the market's crashing, Donald Trump got in the office, everything's going to crap, sell everything. Oh my God. No, regardless, the past 20 years, no matter who the president was, who gives a damn, it was going up for the most part, excluding very micro things, which I'll get into in a different video. But it went to this low, and you would think, okay, if the trend is downtrending, just a simple line itself would show you low, low, and then, okay, maybe if it would hit to here and went lower, then we continue down to potentially go lower. But we broke above it. You see, it tried to go lower. I did make a put here as an example to see if it would. Made a small 3K here from this trade, and then I sold it that same day because it went up again. And since it went up, it broke, especially the next day, the previous low here, and I'll zoom in a little bit for you, broke the previous low here, which made the new trend change back to micro longs and a bigger picture, being bullish. So we had a new high. So if we had a high here and it went to the max of all time, you have to understand and realize it's not going to just run up forever. Short term. Short term, it has to do the same thing what this did, but the opposite. See how this went from here, down, up, down, lower. So now this has to up, down, down, up, down, potentially up, and then figure out wherever it's going to stop, and then come back down a little bit more, and then go up a little higher, and so on and so forth. That's how the market runs. That's why my trade's still going up. I'm up $3,170 now, give or take, off of 10K. And you may be looking, well, why am I only up 3K in this scenario? Because other trades I've done this, and one of these trades I'll be up like $10,000 or so. The reason I did this is because A, I knew it was going to bounce, but B, I didn't know exactly where it was going to bounce from. So this was the lower low over here, which basically meant if I duplicate this, this could have bounced off of this zone here, or it could have bounced off of this zone, or realistically, it could have bounced off of here and just barely been above this candle here for it to be a higher low, right? Because that's to be low, high, low, low, high, low, high, low, and then up here for a high, and then it can go either here, here, or here for a higher low since it's higher than this. As long as it does that, then we're in that upward trend, back to the upward trend, to the upside. That's the logic. Now the problem was that catching that piece after this week is supposed to be so volatile with FOMC coming out, and so on and so forth. You don't know if it was going to stop here, or stop here. So I just took this trade and did a different thing that I usually would do. So normally I'd buy 30 days expiration for contracts if I'm for sure it's going to bounce in this exact area. If I'm not sure, I'll go further out, 60 plus days, 62 days in this scenario, out for the contract expiration. Pick the lowest one over here for within the 14 days of a strike price, usually typically as an example. Choose that guy, maybe only buy 8 to 10 contracts or so with this, and then let it ride. It's going to be expensive. You can see it's expensive, but I'd rather do that when I'm not 100% sure where it's exactly going to bounce. And then for the trades when I'm sure it's going to bounce, I'll go back to my normal 30 days expiration for a contract, put in maybe $20,000 to $50,000 in that single trade, and then I'll make $10,000 to $30,000 with that single trade, versus now where I put in only $10,000 and make quote unquote only 3K. And that's basically how I made the 3K in the 1 day, and I'll probably sell it today since it's getting towards that all-time highs because that makes sense. And FOMC is tomorrow, so why not?